Welcome. I am Ernie Goss, Professor of Economics here at Creighton University in beautiful downtown Omaha, Nebraska. Today we're going to talk about our Mid-America Economic Report for the month of July. And let me just tell you, this is Christmas in July and August. There's so much data coming out this month, and this is, I would argue, this is one of the more important reports. Now, it's not the most important report, but it's important. So I would urge you to listen up here, and we'll talk about what's going on in the Mid-American economy. And that's the economy that we survey each month, stretching from North Dakota and Minnesota in the north, right down the middle of the country, to Oklahoma and Arkansas in the south. So we're surveying supply managers. Now, why do we survey supply managers? Because they're the front link in this chain, this economic chain. So if they're doing well today, we're going to be doing well later on. And that's what we're going to talk about, how they were doing for the month of July. So let me talk about that right now. And it's a leading economic indicator. It's sort of the canary in the coal mine. So the overall index for the month of July tumbled from 60.6 to 57.0. Obviously, that's not good. Now, how bad or good is it? These indices stretch from 0 to 100. 50 and above, 50 is growth neutral. Anything above 50 is growth positive. So even as it's dropped, it's still a pretty good number. This is not like your biology test scores when you wanted to get above 80 or above 90. Anything above 50 is reasonably good. This was a 57, so not bad. The employment report, 61.4 to 53.8. Now that's getting a little low for me, so the job numbers are a little weaker. Now what's going on there? Why is the economy, at least the leading economic indicators, why are they getting a little cooler? Housing. Housing is just not doing as well as we'd like to see. And obviously, if you live in this part of the country, this part of the country is dominated by agriculture. Agricultural commodity prices not doing as well. Now, when we looked at other numbers, the average weekly salary for workers up about 2% from this time last year. Again, with inflation at 2%, that's a zero. In other words, you subtract out inflation, you're not doing very well in terms of the average salaries for a work week. Now, inflation, our inflation gauge was 73.5 last month to 67.6 this month. So a little cooling there, a little cooling. I don't think that's long-lived. I expect that to bounce up there again. It's still indicating a little higher elevated inflation. We'll call it elevated inflation from this time last year. Looked at business confidence. It dropped a bit. And that's sort of what you expect. Look what's going on in Russia. What is going on, I guess Crimea, what Russia is inflicting on the Ukraine, and what's going on, of course, in the Middle East. And all that creates a lot of uncertainty, a lot of what I'll call lack of clarity, a lack of certainty. We saw it a little bit. Now, those numbers, again, that's not a bad number, 60 for the month, but it is down, and I think that's the explanation. Now, when we look to exports, and trade is very important, the exports went from 60.2 to 57.5. Still a pretty good number. Imports grew from 53.4 to 57.7. Pretty good numbers there. So what this is showing us is businesses that are expanding purchase more from abroad. So that's expected. Now, we asked the companies, what really explains what's been going on with your company over the last year? What's been the most important factor driving growth? About 1/4 said global economic conditions. Now that may sound strange. We're in the middle of the country, but that's what we're seeing. In other words, exports are very, very important. They were important for the month of July. I think I'm looking forward. I expect those numbers to continue to be pretty good. Now, what should you, as a consumer, as a business, as a family, look forward to? What are the indicators you need to watch going forward? How about retail sales? Those come out on August the 13th. Now, why the heck is that important? That's retail sales for July. It's going to tell us, is this economy slowing down? Now, I don't think it's slowing down. I think we're seeing pretty good growth, but it's nothing to write home about. It's still not as good as we'd like to see. On August the 19th, we have the CPI, Consumer Price Index. Watch that number. If that number year over year or annualized gets over 3%, now that's troubling. Why is it troubling? It means the Fed, the Federal Reserve, is going to be raising interest rates, so that's something you need to keep an eye on. That's the critical number, I believe. Look at the purchasing management indices. Now that's what we've just talked about. What are purchasing managers, supply managers telling us? That number comes out the first business day of the month of September. Now that's Tuesday, September the 2nd. Labor Day is the first, is Monday, September the 1st. Look at the 10-year Treasury. Keep an eye on that yield. If it goes to 3% and holds there and moves above, watch out. Watch out for even higher rates. It's not even close to 3%, and we're well down to 2.5%. So we're well off that. We're looking at anything the Fed says. Now, I hate to, as an economist, I hate to have undue attention drawn to we economists. That's so as modest as we are, and as modest as we should be, actually. We're drawing too much attention. But we are watching what Janet Yellen has to say. She's the head of the Federal Reserve. Is she indicating that interest rates will begin rising more quickly and sooner than what we now anticipate? Rates are not likely to rise before the first quarter of 2015, but in advance of that, we could see rates moving up a bit. Now, what are the risks? The risk, of course, is the housing market continues to be very weak. Oil prices, if you saw the Middle East, really the conflicts expand where you had real pushes, increases in oil prices would be a concern. And finally, trade embargoes. Right now, I won't say tightening the noose around Russia, but we are increasing sanctions, economic sanctions around for Russia. That's a real concern. They're retaliating. In fact, Putin just announced that they're going to be taking some steps to limit their purchases of our products. That's a real concern, and how that spreads. Of course, last month we had China limiting DDGs, dried distiller grains. That's a huge product for this part of the country, and we don't want to see trade restrictions. At least I certainly don't. Most economists don't. So keep an eye on those trade restrictions. So that's it, folks. It was a good report. I think I have to say, looking forward, we're probably going to continue to see pretty good economic conditions. Our survey indicates the economy is going to continue to move along at a positive clip, somewhat slower than what we've seen in the past. But again, a good report for the month of July. I'm Ernie Goss here with the Hyder College of Business at Creighton University in beautiful downtown Omaha, Nebraska. Until next month, that's the first business day of September. May your economic cup runneth over, and thank you.